Hi, I'm Roger Lemaitre, President and CEO of UEX Corporation. We're one of the largest resource holders in the Athabasca Basin with 5 production visible projects. And we just inked a deal with UEC to form the largest North American focused uranium company. And we hope to close that deal here at the end of next month.
So deal not done. Still time for others to put their bids in. Is that right?
Always is. There's always, as when you run these kind of public companies, there's always a chance someone can come over the top on a hostile bid between the time our infocert come or between the time we announce the deal and the shareholder vote. So yes, not impossible.
Not impossible. But tell me this: in all seriousness, have you spoken to most of the potential bidders prior to this UEC process starting, and have they declined, or do you genuinely think that others could still have time to kind of come in with a hostile bid?
Well, you'll see when the infocert comes out. This has been a long process, and there were multiple parties that were interested, and we've talked to a lot of them for sure. So yes, it's not been an exclusive process all the way through.
Right. So does it make sense for a US company to be bidding on a Canadian project, or should they? I know one company's quite good at last minute hostile bids. I think most people know who I'm talking about. It doesn't make more sense for a Canadian company to come and look at you. Why is this marriage of US and Canadian? Good for your shareholders and good for the market.
Well, I guess there's 3 things that I look at when it comes to this particular deal. One is where the geopolitics of the world are going. So us with UEC creates a North American focused company that has production visibility, not just with the United States, but also those sort of medium and long term here in Canada. And it creates, I think, something that the market's going to demand, or at least consumers of uranium are going to demand, particularly Western consumers. So it creates a company that has, there's not probably an American company that can supply all the American needs. There's not at all. So it makes sense to have some Canadian aspects in there. When it comes to our shareholders on this opportunity, what I love about it is UEC is extremely well cashed up with $180 million US. So for us, dilution for our shareholders on our portfolio of both American and Canadian projects would be minimal. I think most people don't understand their most recent acquisition of the Uranium One assets in Wyoming. This is a company in the United States that's poised to, with very minimal capital outlay, to be a producer imminently. And I think when you look at the peers in the uranium space, if you're looking at who's going to become producer, there's several hundreds of millions of dollars worth of capital investment needed to get to the finish line. And so it creates a really unique company, production ready, and not just ready, imminent, and growth opportunities, the Athabasca Basin, within the middle, our portfolio of opportunities such as Wheeler River and Millennium and Kigavik and Shea Creek, that to create a really sustainable long-term company. For our shareholders, we get the immediate bump with the premium, the 50% premium that comes with the deal. I think one of the big criticisms we've had for many years is that our pounds aren't worth as much as our peers in the space. Under the UEC banner, we hope that those will re-rate. And then, you have the market movement, and all of our companies are moving together with the market. So, and I would consider that to be the same, unless, of course, you make that big discovery. And you still have that opportunity within the new pro forma UEC to do that.
Right. It's kind of interesting, because I think some of the accusations thrown at you by the retail portion of your shareholder base is that you've not been dynamic enough, you've not taken advantage of the certain movements in the market. And I think also that the Denison coming in on the JCU deal, gave ammunition and fuel to that fire, right? So, and now you've got to see you potentially, still not over the line yet, got a CEO of UEC. He's a bit more marketing savvy but here's the thing. They're positioning themselves as a uranium company, but what they are is they're a very smart market mover and able to raise capital using these movements in the market to raise cash, remove debt, make acquisitions, to put themselves in a position to be a producer, which perhaps some people are arguing they weren't really capable of before. So is that also why this makes sense for if you were talking to your retail shareholders, why it makes sense? You can take advantage of that kind of market making ability of UEC.
Absolutely. That's what I call that second bump, their ability to potentially re-rate our assets under their banner. I think that's definitely one of our considerations in this whole process. But I would also, for those people who say that UEC is not an imminent producer, or they're there, we part of our process was doing due diligence on their assets and visiting their properties and visiting Wyoming. And
When was the Uranium One acquisition from them?
it would have been just at the turn of the new year.
So right. And what did you make of the assets they had in the portfolio prior to that in terms of the ability to get in production?
I think those were the best available assets that were financially reasonable in all of the United States.
Uranium One assets.
Yes, I do.
My question was much more specific. What did you think of the assets they had in their portfolio prior to that acquisition in terms of ability to get into production at some meaningful scale? Would you have done the deal if they hadn't got Uranium One in their portfolio? I
think what Uranium One does is lower the overall costs of what they're doing from Texas. And it's probably it would probably be next on their list of what they would tackle. And I think it opens the door to them being able to move into production without having that U.S. Strategic uranium contract. So it makes them a much more viable producer than they would have been before. It doubled their resource base as well, so it made them a much more significant player in the space. Without a doubt, before this acquisition. So, they've gone from being a 75 million pound resource company that, has had those Texas assets ready to move forward to being, a 300 million pound company with our acquisition, with production imminent in several spots, plus our, short, midterm production portfolio through Weeder, Millennium, et cetera.
Okay. So would you have done the deal? Would you have done this deal 6 months ago prior to the Uranium One transaction? Would it have been the right profile of company to come and acquire you?
I think the Uranium One acquisition makes this a much more attractive opportunity for us, without a doubt, because it just where it positions the company in terms of the pro forma company in terms of total resources, because it's that those Uranium One assets have been producers and they've been sitting in that care and maintenance process and done extraordinarily well. And they brought an awful lot of, they had the expertise in Texas, but they brought an awful lot of other expertise to the company as well through the Wyoming assets. Those people were working basically with Pathfinder / Orano's predecessor companies and have been through the process. They've remediated well fields in the United States, which nobody else really ever has done. They're very solid. There's a solid operational setup there for sure, and very little effort needed to be. What I mean, almost no capital to begin the production.
Right. Okay. I hear what you're saying. I hear what you're not saying as well. So it's a smart move by UEC beginning of the year for sure, and taking advantage of the market situations to raise capital. So well navigated and chapeau. Are there still equally good suitors out there who could come in and give you a similar sort of thing? Balance sheet, profile, re-rate, etc. Do you think there's still time, genuine? Because I want to either kill that conversation which is going on in social media, or say, well, actually, maybe there's a chance. Not that necessarily you can take advantage of it monetarily, but you think there's still a chance that people could come in with a hostile bid. Is that realistic or not?
Well, I think it's a realistic possibility. Do they create more value than the deal with UEC?
Yeah.
I have obviously a strong bias because I think there's this perception out there that we were sitting there waiting, or that this is something that was forced upon us. And, while when your company's in play, there's a little bit of force, but you also find where the best home is. And I think I really do believe we've done that. I think with the UEC's and Emir's ability to market, that ability to re-rate our pounds is probably greater under their banner than anyone else's. Everybody will move with the price of uranium markets. I think they're up down. We all move in tandem, and of course we'll receive a premium. But I think what the question is, the real question to ask shareholders is who has the greatest opportunity to re-rate UEX's assets. And I think Emir is probably that person, and UEC is that company. Not as that, just what the new company looks like from an investor point of view.
So we get it. So it's now a North American story, obviously, with all the kind of conversation narrative in North America, Biden, etc., and all the geopolitics outside of that, Russia, Ukraine, so forth, with potential sanctions there. I get that. I'm just trying to answer specific questions for parts of the investor audience, right? So I'm going to stick with the retail side of things right now. Some of the retail guys are furious. They think you've sold out. You've done this way too cheaply, and they've been, well, they're not happy. I won't put watch my language, right?
That's fair.
And are they wrong?
I believe they're wrong.
Right.
Otherwise, we wouldn't have done the deal. And certainly, they're entitled to their opinion, and I respect it, and I understand exactly where they're coming from. I would argue that the only thing that's going to change the value of UX is that next discovery. We're going to have to, we were in a position where we were going to have to raise some money this year. You can imagine where the stock would be today if we didn't have the 50% premium with UEC and having to, in the market, knowing that we're going to have to go out and raise some money. So short term, this deal helps us out a little bit. Long term, it's the long-term dilution on capital or on the company that I think with the balance sheet that UEC brings to the table really helps UEC, the UEX assets towards that discovery stage. Like our exploration budgets, we've been very conscious about being shareholder dilution to the best that we can. And our budget's been up and down pretty radically. Last year when the market was moving, we were tied into a $2.5 million budget, which was pretty small. People going, why aren't you doing more? Well, you also don't want us to dilute at the same time. So I believe that, quite frankly, the exposure to what we're going to get on the production front offsets, that it's going to help us finance the work that we need to do at a more stable level so that this team can find the next bigger deposit. And I just truly believe that. And I understand that people don't necessarily agree, but I don't think UEX moves differently than anybody else without that next discovery. And that's going to be more capital in the ground. Yeah,
like, I mean, 5 weeks ago, you're at 25 cents. Like, all uranium junior has been absolutely battered, but this deal has, UCC up at 35 cents. It's 38 yesterday. It's a different profile. I get it, but there also seems to be some fun and games in the market. If you're looking at the asks and bids going on out there, I guess that's what happens around these sorts of times. Right. So it's the right deal with the right deal structure, and it's the right company. So let's get into what does it actually mean for you guys in terms of what does the proposed deal look like? What's it mean for shareholders? What's it in terms of what they get out of it, and what's it mean for you, the CEO? Are you hanging around?
I guess we'll start with the last question first because it's easier. They definitely want me to stick around.
Okay, in what capacity? Doing what?
To help continue to run the Canadian assets.
Well, is it because it's very distinct parts of the business, right? There's a US business and there's a Canadian business. It's not like one management team is going to manage all of the above. Different skill sets required.
Very much so.
Okay,
very much so. The UEC skill set is really production and ISR focused. Right. And not necessarily exploration driven. Well, they have done exploration. It's a very different style of exploration than ISR, and with a very different focus to nearer term production. They don't necessarily prove up resources as they put into well fields.
Okay, so you're hanging around in some capacity. You're going to manage the Canadian operation in whatever that means, and we'll get into it in a minute. Back to the original question. It's like, what's the deal structure look like? Why is it good for shareholders again?
So what's good for shareholders here, we're flipping UEC or UEX shares for UEC shares. So there's two things. If you don't like the deal, UEC is extraordinarily liquid. They trade 40 million US a day. So if you don't like the deal, there's cash for you at the end of the day because you can sell out very quickly. If you like the UEC long-term North American story, I think it creates a compelling, unique offering to the market that you don't see in the uranium space. We will be the second largest uranium junior in terms of resources in the ground, next to NextGen. But we were financed to be a producing company. So you get short-term exposure to production, right? And not 5 years from now or 15 years from now, but shorter terms than that. You can take advantage of a market and the geopolitics involved. And you don't have to dilute to do it, to be a producer. So for us and for the Canadian assets, it's about being able to engage more capital in the ground with very little dilution, at least in the short term, to focus on our growth, what we think is our high end mid-stage resource level projects, and continue to grow them while Leader River moves towards production, while Cameco gets ready to think about Millennium.
So more importantly, in terms of, so is this a cash deal, share deal, mixture of both?
It's a share deal.
Right.
So it's an all share deal. So we for every UX share, you get 0.831 UEC shares.
Got it.
So it's a share flip. But if you don't like the deal because of the liquidity involved, you could just walk and essentially get cash. So you have an option.
Is that how are you working? I mean, obviously it's not closed yet, and you're very sort of VWAP calculations to work out. But what is it much of a premium to where you were trading at when you agreed to do it?
About a 50% premium to where we were trading on the day that the deal was announced.
You must be near. When was that?
On June. The announcement on June 13th.
Right.
The 10th was the last Friday, which everything was priced on, and then the following Monday, which was 13th, was the day we made the announcement. So it was before trading open. So it was a 50% premium to June 10th prices.
Right. Must be getting pretty close to that now. Are you? I'm trying to work that out. June 10th? No, maybe not. Okay, looking at this, no. Okay.
I mean, certainly the market has gone south since June 10th.
Yeah.
So the equivalent uranium price we would have received would have been 43 cents back then.
Got it. Okay. Well, let's see what happens. It is what it is. Right. You can explain. Is there anything else that you feel that you need to say or state, obvious or otherwise, that justifies your decision to do this? I mean, like, you've been getting lots of mudslinging going on out there, and you've also been getting some slaps on the back going, congratulations. So, yeah, which is true. I think it's worth saying. So obviously, some people are very, very. I guess the family office, high net worth institutional guys see this as making sense, and the retail guys you would implore to kind of look at these sort of three moments where perhaps there's a kind of re-rate or three more chances to kind of get a bump in the stock, right?
Yeah. I think I certainly understand where retail investors go and go, hey, you were trading higher before, everybody else was too. So from a relative position, I think what I'm trying to explain is to shareholders who have a concern is that if the price of uranium goes to $60, you still have exposure through UEC. In fact, probably even more than you do just through UX. And everyone will move accordingly. If the price of uranium goes to $60 tomorrow, you're going to get an even bigger share bump than you would have got through UEX through this deal, because it's a share deal. And so it's whatever UEX or UEC's price is, it's going to matter on the day the transaction occurs. So yes, we were to track every single of our peer companies, we would look like one line on a chart, because that's how we've been moving up and down with the tides. So I'm not so concerned. I mean, it sounds crazy to say. I can't worry about the day-to-day fluctuations in the overall uranium market. All I can say is how we're performing relative to our peers, and this puts us in a more advantageous position. Right.
Talking of taking advantage, you raised $5 million recently, but issued against the UEC share price. So would you say that's been a plus? Because obviously it's a little bit cheaper money than you could have done yourself, say, 5 weeks ago.
Oh, for sure. 43 cents and no commissions, at a significant premium to what we were trading at the time it happened. Yes. And then what it allows us to do is to go as full speed as we want to on our current projects that we're working on this summer, particularly Christie Lake.
Well, let's be clear about that one. This isn't standing still, waiting to see how this deal goes through money. This is not biding your time money. This is, you're going to up the ante on the exploration at Christie Lake and elsewhere. So explain that.
Well, I mean, we could sit on our butts and wait till the bitter end. These kind of transactions, they prevent you from being able to do things that you'd like to do in the field. They also prevent you from raising money when the time was right. We missed the window back in February and March when we could have raised money extraordinarily cheaply. We kind of duplicated that with this particular financing, about the same we would have done back then. because you can't raise money when you're talking about material. You have material information that's the people are talking about transactions. So we missed a window. We probably would have wanted to do more work and probably raised a little bit more money to just push things forward even faster. So this gives us that opportunity to do that. We've also upped budgets on our waterfowl project, or the Orano did, and so we're able to contribute to the waterfowl discovery through their JCU interest this year, where they've made a new discovery west of the alligator zone, so it allows us to continue to see that project move at it's unusual when Orano decides to come mid-year and increase a budget. It's a pretty unusual thing. I have not seen it in all the years I've worked in the uranium space. So we were able to do a little bit more, from our point of view, what happens if someone came over the top? What happens if this process gets dragged out beyond the middle of August? We still need to be creating value for our shareholders by doing work in the ground, and this money gives us that opportunity.
But tell me about the structure of it. So before we get into what you do with it, tell me about it, because you talk about the completion of a $5 million private placement with Uranium Energy Corp, UEC, right? And it's issued at the UEC price of 43 cents, right? So did they get the money and they give that to you? And if so, when? Or do you get the money and you get to deploy that, before the deal closes? And then what happens if someone does come over the top and, does a hostile bid and wins with this money?
Okay. So the money, we already have the money in our treasury.
So it's gone to you. Okay, that's good.
It's in our hands.
Can you spend it?
Yes. Are we going to spend it? Well, yes, we're going to start spending it at Christie Lake. So yes.
Before the transaction is complete.
We both parties want to see us continue to work forward. Now, I'm going to be middle of August isn't going to mean we haven't started the drill program yet. It means there's not going to be a tremendous amount of results or drill holes out before that occurs. No, we want to see, both parties want to see us continue to work forward and move forward with our projects. So yes, that's happening.
My point is, will UEC feel the same way if someone comes in and gazumps them and you go with a new higher bidder?
It's a thing from I can't speak for UEC, but I can only imagine what they're thinking on this process. It's shares. So at the end of the day, if someone does come over the top, they're going to receive the benefit as a shareholder as well.
Okay.
There's no reason they don't. It's not like a term loan where the acquirer has to come back and pay the term loan back. So from our point of view, it's more advantageous because it doesn't create a barrier.
Okay, fine, understood. Okay, go on then. What are you going to do with this money, and when? And is this truly ramping things up, or is this just taking advantage of a situation to raise any capital?
No, it's certainly going to allow us to do our program at Christie Lake that we wanted to do, that we might have had to cut back on based on the expenses of kinds of expenses that you get doing a deal like this that would have cut into some of our capital that we wouldn't have thought about back in the beginning of the year. So, unfortunately, there's lawyers to pay. Unfortunately, I shouldn't say that, but and advisors to pay as well. So yeah. we might have considered easing back on Christie Lake. So it's going to let us do more. It's going to let us do more at Waterfront with the Urano stuff. And I think for us, it's going to be positioning for most of this money is going to work its way through to the new year, where we can really go at our winter programs that we want to do again, that Hidden Bay, as well. So we wouldn't be looking at, of course we have to operate on the assumption that the company need to keep the company viable for beyond the magic date that this transaction would close, because it may not close. It may not.
Okay.
Things happen.
Things happen. Absolutely. You know that more than most, right? So let's talk about what the blue sky could be, right? You're on board with a good marketeer. They have acquired some good assets. You're part of that new portfolio of theirs, which kind of changes their profile meaningfully. You've always been cash constrained in terms of being able to advance these things at the pace that you want to do. And you've now got, well, hopefully if the deal closes, you've kind of got access to a very nice balance sheet, but potentially some of this cash. Are there projects that can truly accept not a 5 million raise, but can you get access to significantly more capital than that and move these projects through? Because even UEC will have been looking at some of the Canadian plays like the next gens and sort of seeing how they've been able to create significant value from exploration plays in the Athabasca Basin. You've got good projects, you just haven't been able to get at them. So have there been any conversations from them going, well, if we gave you money, what could you do? And if so, what would you have said to them?
Well, we certainly introduced the concept. They've certainly been receptive, and we're actually, before it close, we're going to be tying those exact things down because they want to hear what we'd like to do. So conceptually, yes. The specifics, no.
Okay.
Right. So if I say we're going to spend X dollars on Y project at this pace, we haven't gone to that granular detail yet, but it's something we're going to talk about in the next couple of weeks for sure. But you're going
to talk about it from the point of view, right? Here's the way you do things properly, right? You and some of your team, ex-Cameco, you do things the right way, and then you kind of got a marketing team on the other side going, well, hey, how do we do a next gen and kind of create significant value in the markets? Those are two different types of conversations going on there. So somewhere that the twain's got to meet. So.
Yeah, and I think I'm glad you clarified where you want to go with that because that's exactly the way we see it. It's just to go, what happens if we were to stabilize budgets over, and I want to throw a number out there because it was not a number we agreed to, but it would be significantly higher than what we're doing now on a more stable basis. And I actually turned that over, and I'll actually say, when I talked to our exploration team about, hey, what could you do if we gave you twice what you've got in the last couple of years? What could you do? And they just start salivating because that's exactly what, it's very hard to prosecute an exploration program when the budgets are up and down. And when you're very variable, the constraints that we put on them makes it difficult. They've been very successful at finding things. We haven't found the next gen, but they have been finding things. But be able to sit there and say, hey, I want to run 2 drills on a program instead of 1.
It's an interesting conversation going on at the moment, right? Because, like I say, you've been cash constrained and the cost of capital is very, very real. And the pace at which you move, again, time is money and all of that. So it's a kind of exploration has been an expensive process. But in this climate where drill costs are going up, drill bits are going up, people hard to get at, and they're going out. Inflation across the board. We're having conversations with companies who are leaving tier 1 jurisdictions like Nevada, like you name any other place that they kind of label tier 1, and saying it's just getting way too expensive. The cost of this capital, the cost of this investment is getting too expensive for us. I guess that's another big reason why, a nice big balance sheet with a nice big cash number on as a line item must be quite exciting for you, in the sense you don't have to go and raise capital anymore.
Well, certainly. I'm not going to lie about that. They're absolutely right. And probably at a level that will make, when you look, I think when you're looking at UEC and their marketing capacity, it's got to be at a higher level than what we've been doing for sure. I look at us in the Performa company as the growth arm for UEC. Like when you look at what they can do, there are still opportunities in their backyard in the US, but they've got the plum ones right now. Where can they grow? And their growth opportunities are in things like the Athabasca Basin. So yes, I think if they want to continue to grow, then investments in UEX's assets are really important to them. I'd love to tell you that we're going to get X dollars a year.
But you can't yet. I get it. You can't yet. You got to have the conversations. I think that would be remiss if you did.
We've been buried in legal documents, and even since then, still in legal documents. So we're going to emerge from the fun of legal documents.
I don't miss those days at all, I have to say, writing them or reading them, quite frankly. So look, thank you very much for your time today. Thanks for the candid nature, as always, as to what's going on. Let's see how your adoring shareholder base receive that, and I look forward to, I guess, hearing from you when this deal is closed and over the line, and maybe you can give us a bit more detail about the allocation of capital towards the exploration program up there in And
I think the next time we talk, we're going to have a much clearer picture of what that's going to look like.
Beautiful. Roger, appreciate your time today. Thank you, sir.
Thank you.